And for more on this, we're now joined by Amrish Baliga, independent market analyst, live from Mumbai. Thank you so much for joining us on the show this morning.
Good morning.
Mr. Baliga, I want to ask you, of course, about the expectations and the overall outlook. But before that, there are some questions which are tailored for perhaps some of our younger viewers who are just beginning their financial literacy journey. I came across this statement that you'd made earlier saying that it wouldn't be surprising if the RBI goes for a larger 50 BPS cut in February. Of course, this follows the RBI's recent liquidity measures. If you had to explain that to some of our younger viewers, what would you say about its practical implications and the factors surrounding this?
See, the practical implication of this is that once the rates come down, borrowing becomes cheaper, and because of which we could have possibly more capex happening in the economy, especially on the private sector side. And that, again, boosts your consumption. And boosting of consumption clearly makes the economy perform better. And that's exactly what we are looking at.
Absolutely, Mr. Baliga. And that being said, how do you see the stock market reacting to the upcoming budget?
Typically, see, whenever we have a good rally before the budget, the risks based on expectations, in fact, rise. However, this time we have seen a major correction. But last 4 days, we have seen a very decent bounce back from lower levels, about a 700-point rally on the Nifty. So the risk at the current levels is that of a lackluster budget, where there's nothing much for the markets to cheer about, basically from the market's perspective. But on the other hand, just like what you're talking a while back, for example, if there are lower tax slabs or tax swaps for the middle class and the salaried class, this could spur consumption going ahead, and that will be taken positively. Similarly, if higher spends are announced on infra, railways, and defense, which again I expect, I think that would be positive but again, execution is the key out there. Like last year also, we had extremely good numbers, but the execution had not happened. Then if new PLI schemes are announced for manufacturing, or there's a special focus on China plus one sector, again, looking at the 10% tariffs imposed by US on China, I think that would be positive for those sectors. Overall, fiscal prudence clearly is expected to be followed because we have done that in the last so many years. Also expected is a focus on export-oriented sectors, looking at the sort of weakness in the rupee in the last month and a half, 2 months. And we have been talking of Viksit Bharat, which is a developed nation by 2047, for which the economic survey has indicated that the Indian economy needs to grow at 8% over the next decade, whereas we are now expected to grow at 6.4 to 6.8% as indicated in the survey, which is much lower. So we need to see what measures the finance minister takes to put India on the high growth trajectory. And generally, whenever such measures are taken for long-term gain, there is normally a short-term pain, which again the markets don't like. So I think we need to see as to what finally happens.
Absolutely. And if the finance minister does announce strong growth-oriented measures while maintaining fiscal discipline, how do you expect the markets to, of course, react in the short term as well as the long term?
Unless it's a path-breaking budget, which I don't expect, we have seen that the budget's impact on the market is short-term. It doesn't really last beyond 2 or 3 days, whether it's positive or negative. So if the budget is decent from a market perspective, we could see a bounce. But again, the sort of a bounce which you've seen in the last 3-4 days will actually continue for another 2 or 3 days. But then we'll again get back into the correction mode, which we've been witnessing for the last 4 months.
Right, and I also wanted to get your views on this. Do you think at this point we're looking at sort of a inflation versus growth balance debate going into the budget?
Yeah, it would be there, no doubt. But then I think the concentration would be more on growth than inflation. Because, like I said, if we have to grow at 8%, we can't afford not to have a growth-oriented budget.
Now, of course, you said that you don't expect it to be path-breaking. That being said, I have to ask, how do you see this budget balancing these two priorities, if it will at all?
No, like I said, the concentration would be more on growth vis-a-vis inflation, because they may possibly want to leave that to the RBI to handle, whereas the finance minister will concentrate more on growth.
All right. And which sectors do you believe would benefit the most from the budget which is focused on economic growth? Which ones could face challenges in that regard?
I would say that manufacturing would be one of the focus areas because Make in India still is focused for the government. And looking at the way the rupee is, we have to play that China plus one and the other export-oriented sectors. So I think something like specialty chemicals, I think, would be one of those focus areas. And defense, again, not from just domestic, but from the view of exports of defense. I think that should play out well.
Right. And given India's fiscal position, Mr. Baliga, and RBI's liquidity measures, like we were discussing earlier, how do you see global investors reacting to perhaps the upcoming budget?
I don't think, I mean, unless it's a path-breaking one, I really don't see any change in the way the foreign investors will be looking at India, at least in the short to medium term. Because as long as the rupee is depreciating and US continues to do well, when I say US, I'm talking of US markets continue to do well, I really don't see a huge flow into India, I mean, at least for the next 2 quarters.
All right, Mr. Baliga, thank you so much for joining us on the show with your insights on this. Of course, in a few hours from now, we'll know exactly how this pans out. Thank you so much for joining us for now.
For latest news, download the WION app and subscribe to our YouTube channel.